Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of January 29th, 2024. We will touch on where we are in the S&P 500 year to date, and we will go through the different sectors and how they performed last week, as well as touch on the economic reports and data that came out last week and what is coming out this week as well. Then we're going to jump right into the trades on the option trading platform. I think it's super important that we understand the strategies that the rich are using to get richer. Then we can use those same tools and strategies to profit for ourselves in any market. Be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks alone outright. Also, if you appreciate the time and effort that goes into making these videos, please go ahead and hit that like and subscribe button so we can get this out to more people. I really appreciate it, so thank you very much. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning, I recommend you start small. All right, guys, let's look at where we are in the market today. We started the week down. We were pretty flat, actually, for the week. We started the week at 48.39 and we ended up at 48.90 over here. So only up slightly for the week, pretty flat. And year to date, we are up 2% year to date. So we started at 47.43 and we're up at 48.90 right now. PEs are close to 20, so they are high right now. If we look at the economic data that came out last week, we had core PCE that came out. It was forecasted at 0.2%, and it actually was 0.2%. So as expected, and we had some jobless claims that came out at 214,000 versus 200,000 expected, so in line. And this next week we have interest rate decision on Wednesday. Don't expect anything, any change on that. And then we've got jobless claims again Thursday, so we want to keep our eyes on that. And I still think the Fed is probably going to not do anything with interest rates till the second half of the year, but we will see. And I don't think there's going to be 5 or 6 as previously expected as far as rate cuts. It may be 2 or 3, but time will tell. If we go to the FactSet Earnings Insight Report, we can look at quite a few of the companies have started to come out and report, and earnings decline is 1.4% for the quarter year over year, and the 12-month PEs, like I mentioned, are 20 right now. So if we go to the numbers down here, page 14, 13, 15 it looks like, 16 on this report. Here we go. This is what we're looking for. Q1, analysts are projecting earnings growth of 4.6% and revenue growth of 3.7%. So again, versus last year, there should be earnings growth and revenue growth. And for the whole year, calendar year 2024, 11.6% and revenue growth of 5.4%. So it was slightly downgraded from what it was a few months ago, but still expected to be good. And then I always like to look at the PE ratios for the different sectors. And energy is still low. Utilities are still low. Financials are down, but the PE ratios are not super low. So I'm staying light in the financials except for SoFi. The sector tracker for the 5 days last week, we had energy up 5%. So there was a big move up in energy last week, as well as communication services. Year to date, communication services and tech, just like last year, those led the way. So they still have not been hit. I do want to have some protection and think about the downside, because as the interest rates, if they are held off for longer and don't come, and if that's what Wall Street is expecting, that may take a hit to some of these tech stocks. So we will have to wait and see. So let's move into the trades on the Tastyworks trade platform.
The first one that we have is Adobe, and we're right in the middle of the range. We're at 613. IV rank is 11, so a little bit low, but right between the 590. I've got a $10 wide, or actually $10 wide on the call side, but $30 wide on the put side. So we did roll up to puts. And if we go to the curve mode and analysis, actually that doesn't really help us. It doesn't show us the profit zone. But there still is 750 left in extrinsic to collect on Adobe. AMD has been pretty good for us. And let's see. Oh, going back, my target for Adobe is 680, and we're at 613. So it has been trending up, as you can see. AMD is at 160. My target for AMD is higher as well. I've got like a 195 long-term target, and it moved up to 174 from 146 last week. So quite a big move in AMD. You can see straight up. So they've got earnings coming out on the 30th. And if you look over here, I like to keep the earnings right here, but you can see 1:30 after the bell. So that's Tuesday after the bell. But IV rank is high, so there's good premium in it. And I do expect AMD to continue up. Like I said, my long-term target is 195, so I'm long AMD. Chewy, I've got a straddle on 22.5. So you can see the profit zone there from all the way from 18.5 to 26.5 based on the premium collected. I'm sorry, you guys are gonna have to bear with me with this cough. And it was at 19. It's at 19 right now and 27 IVR. No earnings coming up. I like Chewy going forward. My target's around $30, so quite a bit higher long-term target. And it's been traded in that range between 19 and 25, so it is at the lower end of the range. Costco, I've been short because of the big move up. It moved up again and came down a little, but I'm still trying to make back on an earnings trade in Costco. And it's at 686, down from 695 last week. And I am actually getting ready. After I make this video, I'm going to head over to Costco. So I like the stock long term. I'm just short because of the big move up in the stock. And I closed one of the February chains and I moved out to March at 710, 720. So I still want to be short some because the market does move up and down. So I've got to pick some stocks to be short so that we can make money on the downside as well. DraftKings, we've got some poor man's covered calls. So 3 long-term, some leaps options, and then 3 calls at the 40, 41 range against those. And there is quite around that 40 level. There's been quite a bit. This is a 1-year chart, so it's never gotten really up above that 39 level. So there is quite a bit of resistance there, which is like why I like having those calls on, but it has been trending up. So we've been doing really well in DraftKings. Over the last year, we've made close to $2,000, $1,944 in DraftKings. So I like it long. 38 is where we're at. My target is up around 50. And you know, one of the ways I'll switch over and show you really quick. One of the ways that I like to look, if you go to DraftKings right here, KNG, and then what I'll do is I'll go down here to all or 5-year. Wow, it's not. Well, DraftKings is probably not a good one to show, but it shows that, you know, we were up here at 73, and my target, if I draw this line, it pretty much takes you up to 50. And that's what I'm going off, is this trend line, and I'm expecting it to grow at that same level, you know, in the long term, the short term, long term. So, you know, over the next year or two.
let's get back into the trades. Google, I'm definitely long Google. It's down at 152 right now, and it is trending up. They've got earnings Tuesday after the bell. I expect it to do well. I've got two credit spreads on, one in February, the $5 wide, 150, 145, and then a 143, 130 in the regular February options cycle. So this is just the weeklies that closes next Friday, and so it's an earnings trade. But $285 in intrinsic that we can collect as long as we stay above that, 150 range. Intuitive Surgical, that's a earnings trade. I don't normally trade that. I do know the stock. I visited the company. They do robotics for surgery, and it was a quick earnings trade because it was at highs, and I didn't think it would move much because I thought earnings would be good, and it turns out that they were. We did a $10 wide iron condor, and the stock didn't move really at all following earnings. So we're up $133 in the play, and we've still got more to collect in premium. Let's see. So we sold that iron condor for $293. I see I've only traded it once in the last year, but $293. We've already made the 133, and it's right in the middle. So I'm gonna there's 19 days to expiration, so I'm just gonna let that sit as long as it doesn't test any strikes. I'll wait and see if we can collect the rest or most of that remaining premium. IWM, the Russell small caps, I'm still long the Russell 195. My target for the Russell is 210 on the trend line. It's been choppy, up and down. L3 is one that's done really well for us. We've made, just in the last 60 days, I've traded it $621 just in the last 60 days. And basically, I'm long L3. The defense stocks are doing well, with the Ukraine, Russia, and situations in the Middle East. The defense stocks seem to be doing pretty well. It's at 210. My target is 240, and I've got the $15 wide put spread on. So as long as it stays positive above the 210 price, we will collect $349. So actually 335. Yeah, I've had a couple of tranches on, but again, it's doing well. I like L3. They've got a lot of different electronic warfare and a lot of different military situational awareness, AI equipment for the military and the primes, and I expect them to do very well going forward. LULU is the next one. It's been trading in a range. It's at 478. We're right in the middle between our short strikes. Iron Condor. Again, when there's big stocks like this, I like to do spreads. So Iron Condors, and have some protection on just in case there is some big move because they are big, high priced stocks. So it kind of protects you and allows you to chip away and make money consistently. But we've done well in LULU. Yeah, $915 just in the last 60 days trading Lululemon. And I did an earnings trade, but there's no earnings now. IVR is low, but it was still paying pretty good premium. We've got $157 in extrinsic left to collect in the trade. With Netflix, we've got two iron condors on, one in February and one in March, both $10 wide, 530, 620 short strikes, and we're at 570. So we are right in the middle.
of the range, and that is good. And in Netflix, we've done really well, $2,920 over the last year. So Netflix has been a good one for us to trade. They missed earnings. They missed on the earnings per share, but beat on revenues, and then they killed it on the new subscriber growth as well. My target for Netflix is 600, so right in the middle of my range as well. IVR dropped, so but premium's still good. We've got $563 to collect as long as we stay within that range. ServiceNow, that was a earnings trade that I put on last week. I don't normally trade this stock, but actually Jim Cramer had on the CEO. That was interesting. He was wearing some cool sunglasses there. You're gonna have to check that one out. Go online. But I made my earnings trade, and they killed it on earnings and beat as expected. And actually, Cramer guaranteed it. So I know he's not always right, but all the numbers looked great. So I went ahead and played it, and it killed it. And again, I just placed this trade, but made 155 bucks in the trade. And then I threw on afterward because it had such a big move up, and it's at all-time highs. And my target, when I plotted it out, is about 800. I went ahead and threw on an iron condor, so I'm hoping that it's gonna be tough for it to move much higher because it already made a big jump, and I don't think it's gonna drop because they just had good earnings that came out, and it's expected to do well. But you never know, and that's why I traded an iron condor, and I have protection. And there's good premium to collect in this trade. If it stays in that range, I did a fairly close together, the 750, 800, and collected $510. So the most I can lose is the width of the spread, $490. And again, I'm just betting that it's going to stay within that range. So we'll see how that goes, but I'll probably close it after this. Nucor is another one. I think they've got earnings, Monday after the bell. Steel manufacturer, everything I see is they're going to do well, report well, and the economy should pick up this year. So I suspect that they're going to have good things to say. But I didn't plot this one out, but just kind of threw it on last minute. So we'll see how that goes. Palantir is one that we've been trading. I've got 3 calls against 3 leaps, and it's been doing really well. It's kind of been a cash machine. Let's see. Well, not totally. 180 days. Yeah, 400 bucks. But I expect it to continue to do well. It's kind of at lows right now, so you can see that's where the calls come into play. $77, $57, and I've got another $176 to collect in calls. So I'll just keep it between this range. Keep, as long as it stays there. I make money on the leaps if it moves up, and then we make money on the calls if it moves down. And it has been trading in that range. You can see between 15 and up to 21. So we'll keep playing that one. IVR is high. They do have earnings coming out on February 5th. The big one, SoFi leaps options. We've got 9, 10, 11, oh wait, not over here. 14 different leaps options on a year out, and I'm down $1,000. So I'm expecting for an earnings beat. Hopefully, this should hopefully be their first profitable quarter, and I expect hopefully the stock will jump. So we will see. But SoFi long term, either way, I'm long SoFi. I think that the fintech and having everything available on an app and more of the younger generation going to it, and the low fees for the banking, the insurance, the investments, the all-in-one, I think they're going to continue to do well. SQQ is my my ultra short Qs, so that's kind of my hedge. Here's what I like about it. As the market
Well, if we look at the chart, it's down low. It's going to continue to move lower unless there's a big drop in the market. Then since it's short, it will skyrocket up, and it can get up to these levels. So it's going to offset. If it gets up, in the, let's just say it gets up, skyrockets up to 35, we make 6 grand. If it goes up, it can easily, on a big drop in the market, go up to 48, we make 49, 50, we make 10 grand. So it offsets the losses in the other positions. So it's just kind of insurance for me in a way that I can use more of my money to trade options and stay long or neutral. And any big down move in the market, SQQ will offer us protection. So that's kind of the strategy there. If you're using anything to hedge your portfolio, please let me know in the comments below. I really appreciate it. Tesla is another one. I was just assigned over the weekend, so I've got to sell those shares. My short put was at 245, so it assigned. So the one thing that I'm going to do Monday morning when the market opens is I'll highlight both, and then I'll close, and I'll make sure I close them together so that I'm not hit, because it will act as a vertical spread, and the most that I will be charged is the $5 width of the strikes. But if you leg in or leg out, you can get hurt depending on what Tesla does for the day. I am long Tesla at 183. It's had a big drop with China sales down, and I think the first part of the year or mid part of the year, Tesla's going to do well. So I'm going to look to stay long. Any drops further, it's already at lows, but I may just close these out and then put on another put credit spread in March. Verizon, own the shares because there's a huge dividend that it pays. And then I've sold a call against it, so it's a covered call position in Verizon, and it's done well. The stock's moved up to 42. We made $900 in the stock, and then we're making on the options as well. Wells Fargo, it is one of the banks that I own, along with SoFi. 2 Leaps options, I've sold 1 call against it, and it had a big move up last week, but Wells Fargo's down, and my target for Wells, let me see what that is. It's about 55, so not too much higher, but I do like Wells moving ahead. I want to have some banking. ExxonMobil is another one. I'm long. I like to play it above 100, so I've just got a small put credit spread on $5 wide, and we've done pretty well in ExxonMobil. And it can get up to the 120, 130 as it kind of follows the price of crude oil as well. So let's look at the earnings trades for next week. There's quite a few coming out. If we go over here, we put earnings, all, and then we sort by date. You can see SoFi in the morning before the bell on the 29th. That's Monday. Nucor after the bell. And then we've got Cleveland Cliffs, Johnson Controls, GM. Trying to think some of these that we would play. UPS maybe on the 30th. Then we've got Microsoft, AMD on the 30th, Starbucks, Google. So a lot of different earnings plays next week. So let me know what you guys are doing with the earnings trades and what you're trading. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Let me know in the comments below what you're trading, what you'd like to see in videos going forward. Share the video with a friend. Thanks for watching. Have a great week.